not quite a glasses guide, but we've got, basically, I can go into the secondary market, and from there will be other dealers who are selling similar watches, not just here and even abroad. That is the market value of the watch, and that then gives me a gauge of what the value of the watch is. Yeah. People seem to think that, when secondary grade market dealers like me, that they'll try what they deem as lowballing a client, that we're trying to pull the wool over their eyes. We're not. I mean, they'll go onto sites like Chrono24 and they say, oh, well, this watch is worth X, Y, and Z. But it's a bit false to a certain extent, because that's not trade, that's retail. And with Chrono24, there's fees involved, etc. So I think people need to be a bit realistic of why they've been given that price, and there's a reason for it. It's the market value.
And you're there to make money as well.
People forget that sometimes. We are VAT registered, tax registered, etc. So that all comes into the equation. But I'm always fair. But that's how we kind of gauge what the market value is.
About what's it? And I take it the rarer the watch, the harder it is to value.
It's supply and demand. So and it's weird, the watch market at times. Let's take your Sprite for example. What tends to happen with watches like the Sprite, when they are first introduced into the market, they're very, very high. The price is very, very high. So a Sprite might be around £8,000-9,000 out the authorised dealer, but I think historically they were going for like north of £20,000 when it first launched, but they've gradually come down. Why? Because there's more in the marketplace. It's supply and demand. It's as simple. It's not rocket science. And at the moment, the market seems to be kind of flattening out a little bit.
So I guess all the people who buy watches as an investment, are they an investment for the layman?
It depends how long you hold the watch on for. So if you plan to buy a watch now and you think I'll sell it next month as an investment, that's not going to work, because the price you've been sold the watch at, you have to consider the fact that the trader or the company that sold you the watch, they've put their margins in there. Okay, so they need to make money. So long term, it could be an investment, but a lot of it's out with your hands, because it all depends on what the market's doing at the time. It's a bit like, the analogy could almost look at it like stocks and shares a little bit. You're buying an investment piece, but you don't at a price, but you don't know how the market's going to react in a year's time, 2 years' time. What ordinarily does help if watches get discontinued. So they stop producing that particular watch, and that will bring the price up of the watch.
Or there's something odd with it, like there's a mistake in it or something.
Yeah, I don't think mistakes kind of happen, but mistakes won't happen. There was one, I think it was the Rolex Daytona.
It's got an extra space in it or something.
Extra space in it, and that gave the watch that little bit of uniqueness, if you like, and that the value of that.
Do you think that was deliberate by Rolex?